Hello traders, you're welcome back to the Forex Geek channel. In this video, we are just going to be breaking down the best 15-minute RSI strategy. It's a simple yet highly effective approach to trading Forex, stocks, and crypto. So if you want to improve your entries and exits while keeping your trading structured, make sure to watch till the end. Okay, I'm going to be adding the RSI to the chart right now, the relative strength index. Okay, so this is a momentum indicator that measures the speed and change of price movements. It operates on a scale of 0 to 100, operates on a scale of 0 to 100 with readings above 70 signaling overbought conditions and readings below 30 indicating oversold conditions. Now on the 15 minutes time frame, the RSI provides excellent signals for short-term reversals and trend continuations. However, relying solely on RSI can lead to false signals, which is why we combine it with other confluences. Okay. Now here is how to set up the perfect RSI strategy for the 15-minute chart. So we're going to be using the RSI alongside the 50 EMA. We're going to be adding the 50 EMA to the chart. Exponential moving average sets the period to 50. All right. Okay. So the RSI helps confirm overbought and oversold conditions, while the 50 EMA confirms the trend direction. Okay, the 50 EMA confirms the trend direction. And then we're also going to be making use of support and resistance zones. We're going to be making use of support and resistance zones. Okay. All right. The support and resistance zones help to refine trade entries. So now for your chart setup, you open your 15-minute chart on your preferred asset. You apply the RSI and the 50 EMA indicators. Then you mark key support and resistance levels to identify high probability trade zones. For a buy trade, the RSI must be below 30. That is an oversold condition. The RSI must be below 30. All right. Price must touch or be near a support zone. Price must touch or be near a strong support zone for that matter. All right. And then you must also have price above the 50 EMA. All right. Or break above it before your entry. So you wait for a bullish candlestick pattern, e.g. an engulfing or a pin bar, you wait for a bullish candlestick pattern to form. All right. So once the pattern has formed, once you have a bullish candlestick pattern form, remember, price must be above the 50 EMA, the RSI must be coming out from the oversold territory, and a bullish candlestick pattern must form. So once these things have happened, you can enter the trade at the next candle's opening. All right, you can enter the trade at the next candle's opening. When you do that, you can set your stop loss below the support level. All right, below the support level, you can set your stop loss. Then your take profit, you can set it at the nearest resistance. Okay, you can set it at the nearest resistance level, or when the RSI reaches the overbought territory. You can decide to exit when the RSI reaches the overbought territory. Okay. All right. Now for a sell trade, the RSI must be above 70. The RSI must be above 70. That is an overbought condition. Then the price must touch or be near a strong resistance. All right. Let's look for a good example. Okay. So here we can see that the RSI was already above 70 overbought territory and price touched a strong resistance. All right. then the price must now drop below the 50 EMA. It must be below it or drop below it. Then you wait for a bearish candlestick pattern to form. All right. So we can see this rejection candle here. You can see this rejection candle that followed a doji. You can see there was a doji here before this rejection candle. All right, and you can see the RSI was dropping from the overbought territory, and you can see that it got rejected from this resistance and it dropped below the 50 EMA. So after all these conditions have been met, okay, you can enter your trade at the next candle's opening. Once you do that, you can set your stop loss above the resistance level. All right, and then your take profit, you can set it at the nearest support level. You can actually use nearest support level, but make sure that you have a good risk to reward ratio. For example, this trade is not a good one. It's not a good one because our risk to reward ratio is poor. 1:1 is poor. So the minimum you should have is 1:2, or at least worst case scenario 1:1.5. All right. So this is a poor risk to reward ratio. So we are going to stay out of this trade. Had it been we had a good risk to reward ratio, then we can consider taking the trade. All right. So to filter out bad trades, you have to follow these key rules. Do not enter a trade just because the RSI hits 30 or 70. Always confirm with support and resistance levels and price action. Okay. Avoid trading during high impact news events. Always check the economic calendar. All right. And also only take your trades that align with the trend. Only take trades that align with the trend. If you have a prevailing sell trend, you should only look for sell opportunities. If you have a prevailing buy trend, you should only look for buy opportunities. Okay. It is very, very necessary. It is very, very, very necessary. Okay. All right. You can use the 50 EMA as a guide for identifying the overall trend direction. Okay. And then, of course, avoid trading during high impact news events. So the 15-minute RSI strategy is effective, but risk management is key. Never risk more than 1 to 2% of your account per trade. Stick to your stop loss. Do not widen it to avoid a loss. It's very bad. Follow the structured plan. Do not take random trades outside of your strategy. So that is the best 15-minute RSI strategy explained in detail. If you found this helpful, hit the like button, subscribe to the channel, and turn on notifications for more powerful trading strategies. Drop a comment below. Do you use the RSI in your trading? What is your favorite way to confirm entries? Let us discuss. See you in the next video and happy trading.